Ice coat, white coke, how you live with that smoke? Hop in, jog in, I'm just kidding, I'm broke. Sit a lot, I've been waiting for the day I don't get my pay. Check will make me happy instead of me getting laid. Never done in the middle with a gun, put a hole in his chest, put a torso don't fall right. In the sun, but until the desert does, we don't have no fun till we chillin' at my graveside. I'll be wishing I'm dead, I'll be missing my friends, get me out of my head, all the letters I sent. I'll be wishing I'm dead. I'll be wishing I'm dead, I'll be missing my friends, get me out of my head, all the letters I sent. I'll be wishing I'm dead.
All right. Geez, I should have done a longer intro. Wait till people come in. All right. Maybe I'll do in honor of Kevin.
The point is, to me, real estate's freaking easy because I look at this stuff and I go, I know what to do. Stocks, I don't know. So don't ever expect Meet Kevin to sell you a stock investing course.
Okay, that was Meet Kevin after he saw Tesla earnings, apparently. So, hold on a second. I should see if Bacon wants to come on. 1 second. Copied. Hold on. So, okay. Let's see. How long ago with this video? Kevin looks older than you now. Oh my god. Should we maybe we should play did he like cry when he was watching the live stream of Tesla's earnings? I'm wondering how sad was he when it all went to hell on him? Geez, getting text. Yeah, so let's see. People are texting me, sorry. Okay, hold on a second. I'm not even lying. I'm really busy. Like, so I probably should do. It's really hard to find time to like actually do real research and real video topics right now. So I'm sorry, I can't. I used to like to prep more for live streams and have research and stuff, but our audits are due by. Our audit season's supposed to be over in a week or two, so it's like frantically getting everything figured out. Oh, look who's here.
Hey,
Bacon.
yeah.
So I thought it was funny that there was one guy. So I don't want to harass the guy too much, but he can't let go. Did you see the guy on the Fabio's live stream?
I did not.
He cannot let go of the fact that I said that there were parking lots full of dead Teslas in Chicago.
Yeah, that one. Yeah, I remember.
That's the hill he's going to die on. I've talked about Tesla a bunch between my videos and Fabio's, but that's the hill that he's going to die on and hate my guts over. Hey,
what's going on?
Yay!
So that guy is so mad at me because I said that there were parking lots of Teslas dead in Chicago, and he said there were only 8 in the whole city that got towed. And I was like, how do you know that? Like, where do you pull up 8? Only 8 Teslas in Chicago.
What?
A city of millions of people got towed apparently by this comment. So
what is this the tax reversal talking about?
No, some guy is like really pissed at me.
Yeah.
When we talked about Tesla, was it yesterday or the day before?
I expected him in his long rant to be like, "Oh well, Optimus and the Dojo will be great. You'll see."
Yeah, I mean, you want to fight me on something? Fight me on that. Like, let's talk about the futility to me of, I don't know. How much more do you got to talk about Tesla? But like the guy literally is telling you that the artificial intelligence is a long shot. The robot, the robot makes no sense. I don't understand it. I think he's wasting his time. I think I said to Andrew, I'm like, I think they should focus on a premium electric vehicle, and they should focus on their energy business. And I don't understand all the other stuff that Tesla's doing right now. I think is a waste of time.
I think we were talking about this.
Yeah.
The company is actually kind of like, I don't know how much capex they're spending on the other stuff. Like I don't know that well. It'd be interesting to see if you pulled out and it was like just the car and energy portion, how much capex that saves and how much that difference that makes for their bottom line. And it also save on opex at certain levels too. But
yeah, it'd be interesting to see.
I mean, I don't. Oh, go ahead. Sorry.
If they're buying NVIDIA GPUs, so that's expensive. He said they on the call. So if they're trying to get into an AI war, like, I mean, Meta's buying billions of dollars of GPUs from NVIDIA. So Tesla's going to be selling diminishing returns cars and buying GPUs. I don't understand this business they're in. I think their biggest problem, the price war with China, I think is a huge mistake. Like trying to build a cheaper car than China. Like, you don't, GM, Ford, Chrysler, they've never gotten into these competitions. You know, they put a car and they're like, this is our F-150. It sells for like this much money. They've never been like, we're going to undercut the cheapest freaking piece of shit truck that a Chinese company makes.
To be
That's not
fair,
the business.
I don't know if I would use GM and Ford and them as my beacons of great business plans in the last 30 years. And that's coming from someone that's born and raised in Michigan who's had 2 generations of family members working for Ford. So
no. Don't try and weasel out of this. You left. You left.
Their truck business has been their truck
I wanted to get away.
Is very
slush,
successful.
Man.
Yeah. If you could take the F-150 out of Ford, that'd be an amazing friggin' investment. Just the truck.
But yeah. Solo. Yeah.
You get all the other shit with it. So
gosh. I don't know how long I'm gonna last because I'm tired. I'm having a lot of fun with the house right now.
Oh.
Long day at the office, Andrew.
Yeah, easily go to the office, get off, go to the house.
So remember all the YouTubers that put in their DCF models like a year or two ago, and they were so excited to put 50% CAGRs for Tesla for 10 years. Like, I wish someone could clip all of those YouTubers and put it into like one video. There's so many that did that.
I don't think there's a company in the market where if you put in 50% CAGR revenue growth for the next 10 years, it wouldn't be an amazing buy. This is my thing with DCFs, and I say this: DCF, it's a great tool. You should know how to do one. You should have them when you're choosing stocks and all this. It should be a real DCF though, and DCF is like anything. There's just like in accounting, garbage in, garbage out. You put in garbage assumptions, you're gonna get a stupid DCF. But people think like a DCF is like the intrinsic value calculation of a stock by like. My DCF says that Tesla's up until $400 a share. That's the intrinsic value. It's like, dude.
A power saw is a great tool, but if a complete nitwit is around one, there's going to be a lot of blood on the floor.
The problem, like, my favorite part of the call, I died laughing when I was at the gym when whoever was next to Elon is like, the robot doesn't really do anything useful. So we're working on that. And then there was like this awkward pause, and then Elon's like, wait, no, it does do useful functional things. He's like, oh yeah, sure, yeah, it does, right? Like folding t-shirts, like a $20,000 robot, and then which is what they said it's going to cost. So who knows? It could, knowing them, it'll be double that. And then you're going to have engineers to repair these things, and you're going to have service contracts. And it's like to replace a dude that makes what, $20 an hour, like a minimum wage worker.
Yeah, like to me, it's baffling because like just about all the like automated robotics are like conveyor belts and like specific arms and whatnot that will move things in a very specific way. Like
a lot of these robots that they taught you doing useful things, it's like we have them. They just don't look like humans. But there's robots that do like 100, 300 spot welds on a car.
Yeah.
It doesn't look like a human because it doesn't need to. It's just a big arm and it just zaps all the spots. Or like food production, robotics and stuff. Like they don't need legs. But so now we need a robot with legs to move boxes and fold t-shirts. But I don't know. I think they'd be better off. I think they should establish a premium.
A robot will get your order right at McDonald's.
Suppose. Oh, it's like AI.
Very high bar. Wait, when's the last time you've been to a McDonald's?
For breakfast?
Oh, okay.
6 months ago. I don't know.
I was going to see if I could
been a while. I'm not gonna lie.
I will say I did find Paul from Everything Money 2 years ago did a review of a Meet Kevin projection of Tesla. I don't want to air it though because I don't want to give Paul any airtime. But because it's the only copy I could find of Meet Kevin's old Tesla videos, and he projected like by 2030 Tesla would be selling like 12 million cars, some crazy shit. I think by now it was supposed to be like 5 million cars by 2024. It's just absurd projections. Like, of course it looked like a great buy. Of course. You thought they were going to build half the cars in America in 2021 or 2020. Like,
so I don't follow Tesla that closely, and I especially don't follow ARK's projections that closely. I was listening to the Finance Junkies show, and Amit was saying that ARK said they were valuing Dojo itself at 20 trillion. I don't think he was being hyperbolic because he kept on saying that exact number. But I don't know where I can find their Tesla like
they're hard to find sometimes.
Like even if we halved that and applied like some sort of discount rate to it that made sense, that would imply an impressive market cap, regardless of what premium or discount.
So what is Dojo? I don't even know. This is what I'm saying. Like,
It's their AI.
I don't think it's the AI that runs on NVIDIA chips, right? So it's like isn't it kind of like the idea behind so it's the AI that currently runs on NVIDIA chips that they think will be able to run on their own chips, right?
Let me look. I barely read about that. Tesla Dojo.
I mean,
by the way, I was totally. I watched that show and I was totally for what Chris Patel said, and I don't think he should have apologized. That's just me.
Well, no, Chris, if you listen to this, you were right.
Yeah, but
love
that's why you get paid.
Yeah, I mean, like the not excrements, but the comments on Musk in drinking his cum aside, everything else I think was completely on point.
I was like, just say that once, but then they said it over and over. I'm like, oh, don't keep repeating that.
Yeah, then it was
joke. Like, now it's not funny.
Yeah, I kind of got beat to death.
Tesla boomer mom was not happy, I guess, but
yeah, I like how she's like, no, I'm a real analyst. I'm like, your handle's Tesla boomer mom, and you think that you're like not a community channel?
She is impartial, sir. I'll have you know, she does not have an agenda. Okay, Dojo. Let's see. AI training chips to power Dojo system. Implement bleeding edge. Okay. Yep. I look at this and I'm like, I thought you were a car company that had kind of an interesting energy business, and now you're up against like Amazon, Microsoft, Meta. You're going to compete with them?
No, they're competing with Apple and NVIDIA and AMD. What are you?
Everyone again.
They're
more
making their own chip.
Power.
See, I mean, it's not fab, so it wouldn't be. They're not. They're not fabrication, right? So it's design.
Yeah, most likely. If it's sensible, it would be design.
Yeah, from what I only briefly look. I think it's design, right?
I almost think with their Gigafactory expertise, they might be better off a fab. But I mean, either way.
Be rough. No, well, the problem is that aren't all their gigafabs like already spun up, like and built in?
Yeah.
Because like to do a proper fab at that high end, like it's friggin' mind-boggling, like how much capex you got to put in.
Yeah.
I love how he talks like it's so easy. They're going to develop a robot with artificial intelligence, and it's going to use the same system that drives the cars. So imagine this one FSD system will cover everything. And then they're going to license out FSD apparently. And he's shocked that other companies don't license it. I'm like, why? Like, why? I don't know. It's like shocking what he says sometimes. And yeah, they don't want, I can't imagine they'd want to partner with them unless they have no choice. But I mean, what would they do with FSD? Like, you can't just plug that into a car.
It would have had to been structured as like a joint venture, honestly, like for it to have the best chance. Like,
it's just like, how about let's just actually finish FSD before we talk about it, implementing robotics with it and all this other, because we've already thrown out robo-taxis. He did not say robo-taxis once in the call. So apparently that doesn't exist anymore, with even though that's all they talked about last year.
Very sad.
All these channels. So fun.
Yep.
But so I don't know.
So mind if I do a soft pitch real quick and change the topic?
Okay.
It's an industry you might be interested in.
Oh, one last thing. So this is one last point. So he said they're going to sell 250,000 cyber trucks, I think.
Oh, yeah.
Or 125,000. So I'm like looking, I'm like, that would put you right up into the Toyota Tacoma territory. I was like, that's a tall order right away.
To be fair, I could see it being 1 year. You sell that many, and then it just drops off drastically. It's been
pre-orders. Apparently, they're already contacting people that thought they'd be contacted like 2 years from now, or a year from now, or two, and they're asking if they want to buy one now. So,
oops.
To give any reference, here's Rivian. This was 2022. Rivian does 2023 numbers are much better, but
yeah,
I don't know.
I think Rivian's trucks are cool. I will say that.
What do you want to?
Oh, what do I want to pitch?
You want to pitch something?
Very soft pitch. I'm still in the discovery phase. But I found a building supplier company, trading at 10 times PE.
Wait, was it GMS?
It was GMS, yeah.
GMS, yep.
So, some interesting, like I said, very soft pitch. I'm still looking into them. I've only listened to a few investor presentations and earnings calls and kind of trying to understand the industry. But one of the things I find really interesting about them is their forward estimates by analysts are trash, which means that if there's like any upside in their future numbers, so like what one company you could kind of compare them to would be like Builders First Source. I think Builders at a 40% premium right now. Even I think like DR Horton and Toll Brothers are trading at a premium. Let me just double check that. And I think those are, I don't say worse businesses, but more capex or more like capital intensive. You have to actually do the building versus supplying. Let me see. So they're the suppliers, right? So if you're a builder and you're trying to build the houses, they're the ones where you buy the lumber from, you'd buy the steel from, etc. Now the difference between them and like builder is they are much more, they're like 50% commercial, 50% residential, whereas builders, I think almost exclusively residential. And I think a lot of people have the theory that you're going to see a significant slowdown in commercial spending while you're seeing a ramp up in residential. And so one of the things I find interesting about them is I think if the commercial market just holds up decently, they're going to do really well. The biggest issue they have right now is I think they have some headwinds in like steel. I don't know if the price of steel has gone up a lot. Let me see. Here's a chart on steel prices.
I think it could be speculated to go up also just because of potential consolidation.
Because they were saying that there's been like headwinds in the steel part of their business, which is also more commercial oriented. So I don't know if they're seeing a slowdown in commercial orders or not.
Yeah.
Like I said, I'm like kind of just breaking into it. But one of the things I find is it compared to everything else, like it's still run up a bit, but it's still, I think, super cheap. One of the things that I get scared of with companies like these, though, is if you go to their return on invested capital.
Mhm.
I can just share my screen unless you have it there. Right there, ROIC.
Mm-hmm.
Can you just go to? Is this quarterly? If you want to go to annual, it helps just kind of put in perspective. I think you
Mm-hmm.
see there like mid single digits, and in the last like 2-3 years, it's just popped off to like the teens.
Mhm.
I think you have a chance of that coming back down, and then what that's going to tell you is like their earnings are going to go down and all that. So
Mm-hmm.
are they going to trend back down to historical averages and like return on equity and all that? Now, also, is that 22 when they inflected on their ROIC?
Yeah.
That's also when they started buying back shares.
Mm.
Oh.
So if you look, they've bought
Mhm.
about 10% or so the outstanding shares since 22, looks like. Here, I have a chart I can share. I'll just put it in the private.
Yeah, they definitely inflected on their share issuance to share purchase.
Yeah, if you want to look at the private chat, I just shared like a Y chart of the historical shares outstanding.
Mhm.
I can only go back to 2019, so I can't. I think that's maybe when they went public. Or Y charts is just not letting me go further back than that. I don't know. It's just Y charts won't let me go further back. Go to like the 5-year. You can see a little better so you can see they're like issuing
Damn.
shares. So I don't know if that's why. Because one of the things I get, like if your ROIC can stay high like that, so that they're, the company will probably do well. But if it trends back down, that means their earnings are probably gonna go down, and their incremental investments won't do as well. And like I said, the estimates that people have for them, like going forward, is like 1% revenue growth, which
If
after
Tesla did it,
well, true.
I'm joking. I'm joking.
See, here's
So, like,
here's the conundrum for us is that the projections are going to look like dog shit because the housing hasn't come back yet.
right.
So we're
But
like any of them, it's like the projections shouldn't look great right now.
well,
And
but that's the thing. So if you go to Builders First Source, that's another housing play. Like they're like a pure play in residential. Um, I think theirs isn't great, but it's better than that. It's like, well, I guess it's like still only like 3.5, 5, but compared to 1%, it seems pretty good.
Mhm.
So, I mean, I think the other thing too is where do you think the commercial market's going? Because my other thought is I don't think rates are that bad right now. I mean, you're probably borrowing capital at 10% if you're a company, maybe 12 if you're like a smaller company. If rates go down, you're going to do well. I think if rates stabilize, I don't think rates are going to continue to go up. Once you like readjust to the shock, I think they'll do well. Like I said, it's kind of a soft pitch. I kind of actually like that they're more diversified and not just focused in residential.
Mhm.
Um, I mean, they haven't seen the in absolute bonkers returns that other people have in the last year because I feel like most of them are up like almost 100%. Yeah, like Toll Brothers is up 72%. How much is Builder up? Builder is up 119%. Is it DHR? No, it's Danaher. What is DR? Is DHI. DHI is up 45, so they're about in line with them, although they just had a massive sell-off in DHI. So I find them pretty interesting. It seems like, and then their go forward, plan is to buy back shares, accretive M&A, kind of like the general playbook to be kind of a roll up, like buy people, tuck them in, buy back shares, have some organic growth, and they're trading really cheap. Now, like you said, the big question is like, where are we at? Are we going to see residential pickup, and where are we going to see commercial? The last earnings call, they felt like the one interesting thing they said, let me see if I can find the exact thing. He was saying that commercials picked up, but was it commercial or residential? Actually, let me just double check. But one of them had picked up, but they're still at levels below pre-2020, like pre-COVID. Framing price declines in activities, but yeah, and they're just buying back a shitload of shares. Oh yeah, here we are. Speaking about commercial, yeah. So talking about commercial cycle. Yeah, so I would guarantee that we are still not back to pre-COVID levels in volumes in wallboard and steel in the neighborhood of 10%. So what happens in commercial going forward, I just don't see it being a draconian event. I don't see it being off 20%, like we saw single family just hit the brakes so hard a year ago. So I think like one of the things, and I wish I could get a hold, because like one of the things I like to learn is like, here's the thing, is that I don't put a ton of and it is a smaller company, so maybe not as many like talented people are looking at it, but I don't put a ton of emphasis on sell side, but I like to see what they're saying, because a lot of times like that's maybe like a narrative. So I'm wondering if they're modeling like commercial just taking absolute nosedive, because that's kind of like what management's hinting as, that people are saying that commercials. Let me see. The question was like, along the balance, can you typically raise prices slightly faster based on the higher cost of inventory going through? Let's see. On the other hand, yeah. So I think people are like, a lot of the questions were framed just around like, how quick will we see a rebound in single family, or when will we see that, and how bad will the sell off be in commercial, or like the decline commercial. And I don't know. I mean, like, if you see a rebound happening in the next year or two in single family, you don't see commercial dying off. And the CEO makes a good point. I think like commercial still hasn't even returned to pre-COVID.
Yeah.
So like, how much of a nosedive, if activity's already been that slow, how much of a nosedive are you really going to have?
There's a lot of activity too with just in New York City, a lot of these office buildings are being converted to like residential buildings,
Yeah.
or a hybrid where you know, offices in certain floors and then housing in others.
Yep.
So
And they do that
because a lot of refitting like that.
Because one of the things they do is, like they said, R&R, repair and remodel. So they do a lot of that on commercial, on both. But so I think it's kind of interesting. Like, I've only listened, I think, I went through the last 2 earnings calls and one of the investor presentations. And like, so I still have, and my thing is, I still have to understand. I want to listen to kind of like other people in the space and get a better understanding of what's going on before making like a hard pitch.
Look at that. I got New Zealand dollars.
Yay!
Is New Zealand fake money? Is it monopoly money?
No, it's Canadian money.
What is New Zealand money?
And dap. There. Was that my thing? Someone asked me to roar. I'm like, I'm not. That's Chris's thing.
You're not.
I don't have a thing yet. Thank you, sir. I don't know.
I don't know. New Zealand dollars look like monopoly money to me.
Oh, Sam says it's fake money.
No,
You ever seen the countries that have like the plastic money, and then like I saw a Reddit where someone left, I forgot what country it was. They left their wallet in their car, and they had like a whole wallet of the plastic money melted together.
Plastic money?
I don't remember what country it was. Because it's like PVC, I think they said. It might have been Canada.
The oil industry must love that.
Out of curiosity, Andrew, how comfortable are you with their acquisitions in the past?
Like I said, this is why it's a soft pitch. I haven't gotten into that.
Okay, all right. Because
I noticed they have a lot of goodwill, actually.
Yeah, and that goodwill has jumped around a little. I mean, like the good thing is like the most recent annual, EY did express an unqualified opinion, but that was their critical audit matter.
What's the
Was
goodwill?
goodwill. Yeah. But again, like if we haven't gotten there, we haven't gotten there.
I would imagine due to their ROIC, they're not going to have much goodwill write off in the last few years.
Yeah.
Um,
So it is interesting. I mean, they are of the market cap where almost anyone could acquire them in theory. But if they're out there doing the shopping, then
Oh, this is an interesting question from the transcript. Commercial is about 2/3 of remodel, correct? Yes, that's historically right. Okay.
yeah.
Okay.
So
I don't know where are they? Are they regional? Like I
They're-
didn't see a map of where they're operating.
I think I saw a map. Hold on, let me pull it up.
okay.
Usually
yeah,
they put a present. They usually have that in their presentations, like where
So-
they kind of function. But
This is a map, but it's not as clean as I'd like. So let me find one because
Yeah.
they're kind of based everywhere in the U.S. They have a bit of a concentration, I'd say, like on the coasts. But let me like
Mhm.
California,
Canada.
New York, Florida. Here, let me see if I can pull it. This map is not like it's kind of hard to read because they have all these different colors and stuff on it. Here's the good one. So I'm going to link an investor press. You just have to go to page 12.
okay, home.
Page.
Wait, don't I have the?
Okay, yeah, there we go.
No, I don't have that one.
Yeah,
Okay, hold
I
on.
see it. Yeah, they're
Pulling it, give me a
geographically
second.
diversified.
Yeah, but they are like, well, I guess it's kind of in line with population for the most part.
Page 12.
It's weird though, like their Canada map seems a little sparse compared to their report. Well,
Yeah,
then again,
'cause-
Oh, okay.
no, they're probably centered in the population hubs because I was looking more so at Ontario and Quebec, but
I've been meaning to
population.
the one Kale talked about, the national rental company.
Oh yeah.
I wrote that down. I just haven't had time to really think about it.
Yeah,
You
it,
should
I
get
it
like
jumped.
the idea.
or Caleb's been in that for a while too.
Yeah, it jumped.
Those are interesting plays.
Yep. Maybe it still has some more room to run.
Yeah.
The dividends got room to grow.
So
Yeah,
I think one of the big headwinds that they're running into right now. Okay, so this was the issue with steel. I remember now. If you go to page 16,
Mhm.
look at that drop in price mix expectations for steel.
Oh
I
yeah.
just saw that. I'm like, holy shit.
Yeah.
Oh no.
But when did
Oh.
they issue? When is this from? Because I don't think they have a fiscal because this is Q2.
September.
Because if you look at what happened to steel price since then, so here's a chart with the price of steel. It's gone up about 10%. But you can see, like, yeah, steel was up a lot. Obviously, like it was, but it's been recovering since then. So they're because like if you're looking at September versus now,
Yeah. Oof.
so because the thing is, I don't know. I'd have to look at what their inventory turnover is, because when were they buying steel and when does that expensive steel roll off? But like this is all that stuff is kind of like, will they hit their quarterly numbers kind of stuff? I mean, like fundamentally, that kind of headwind should fall off in the next. I mean, like in the next year or so. So I don't know. I find them interesting. Like I'm just trying to go through and develop a.
For what it's worth, if it doesn't like realize anytime like too soon,
Mhm.
management did indicate that there's their seasonality that they've observed was Q1, Q2 are the stronger ones.
Mhm.
So I don't know if like the market participants would be that dumb to ignore that, but
Well, remember for them, Q1, Q2 would be is Q1 ending June?
I want to say so.
Yeah,
Let
which
me
so
double check.
because that would track with like
Yeah,
building out.
all the other ones. Yeah.
Well, yeah, because like not a lot of people like to build in the winter, especially in
No.
colder parts of the country.
Yeah.
Interesting.
That being said, though, like
I
they
just
do,
go ahead.
they have the geographic exposure though, where if someone were to have like that rough near or reshoring thesis, that Q3, Q4 may surprise to the upside. In theory, like if they're able to realize
theory.
that top line, yeah, like it could, but
Yeah, I I also like, by the way, that they have one place in Alaska.
hey, building takes place there.
Oh, for sure. It's just
Yeah,
I'm sure that's like
they're not all off the grid.
what's the Fairbanks or something.
No,
No
But yeah,
impairment of goodwill any since 2020. Wonder what that was. Mm.
well, and that's why I said with how much their ROIC has increased,
Mhm.
I would imagine that they're not like impairing goodwill because what you're basically saying is like our investing has gotten substantially better. Like our incremental invested capital has returned a ton of income, and so I can see why. But that's the thing too. That drops off. Goodwill's going to take a hit, but like I think that you make a really good point though. With how much they spend on acquisitions, one of the things you need to get comfortable with is like what's their hit rate on acquisitions been? How good has that been?
Yeah.
Because I think I looked at their use of free cash flow in the past like 3 years. Like half of it goes to acquisitions.
Out of curiosity, how would you analyze a company's hit rate on?
Yeah, look at wow. I'm curious.
Um,
I'd have to look at what were they buying? Like
Mhm.
you could see in 2020 this one.
Yeah,
22. Jesus.
yeah. Because my like informal way is besides like looking at financial statements over time would be look at price movement of like right around the dates of acquisition announcement and acquisition closures.
I wouldn't do that because so are you saying then that your read on like how good of an acquisition it is how the market reacts when they make the acquisition?
It's not the only input in my decision making, but
Hmm.
like generally speaking, if the market thinks a bad acquisition is being made or attempted, they tend to be pretty ruthless pretty quickly.
I
So
mean,
it's not
that's
foolproof,
true, but
obviously.
like I think what you want to do is like really um I think you have to wait because like Wall Street is wrong a lot on how they feel about acquisitions. Wall Street and I'm not saying that like
Mhm.
this is not me saying Wall Street is stupid. I'm just saying when I say Wall Street, I'm saying how the market reacts to it. I think they hated Meta buying Instagram.
Oh yeah.
That was they're like being made fun of for that.
Mhm.
Um, so I think you just have to look a few years out how they do. And what I would just do is focus on larger acquisitions because you like with a company like this, you probably can't focus on every single individual acquisition,
Yeah.
but you look at the past like 4 or 5 like significant ones and
Mhm.
how those have played out. And listen just like management's commentary on their thought process behind these. And then you also can usually find out what they're acquiring these guys for and if they're overpaying. That's
EV
how.
to EBITDA.
Well, actually, that's probably the best way to do it if you're acquiring the company. But
Hmm. Interesting. The only other thing I found was the cabinet company.
yeah,
Everything's like
well,
80% up. It's like fucking A. Okay. Well,
I literally was like running a screener and I just came across these guys. I think I was looking at, let me see what the screener was.
Oh
Uh,
yay. Here
Forward
we go.
PE less than 15. Revenue was up more than 10% year over year. ROIC is over 15. And their net income went up more than 12% in the last year. And they're from the US.
Whoa, Neil Weston, really? Neil Weston.
Yeah,
Welcome, Neil.
It's that I'm disappointed in you, Andrew. Why don't you have a price to innovation use in your screens?
dude, that person. Who did they work for? Because that is actually
Morgan
genius what they
Stanley.
did.
Morgan Stanley
Price to
over at
innovation?
CNBC. Yeah.
That's
Yeah, there's a
genius
clip.
because like you can peddle so many reports off of that, and it's
Mhm.
like retail's just gonna eat that up.
Yeah, there's a clip going around on like FinTwit.
I saw it.
Yeah, where it's price to
What?
innovation. Like this lady
just
from
kn-
Morgan Stanley.
I just never had seen that lady before, so I didn't know who she was.
Same here. Yeah.
Oh, come on.
Yeah. Like price to earnings got mentioned and she literally said, "Yeah, there it is. There it is."
Is this it?
Yeah, it looks like it.
Price
Yeah.
innovation multiple sounds.com.
This is not the .com era though.
I don't think so either.
People are actually calling out the BS. I think is the big thing.
Oh, look what's in the background. Interesting.
Hey, is that a segue?
I don't know, but all I was gonna say is Vince McMahon's off the board.
Yes.
I'm
yes.
excited. So the meat might be on the table for TKO.
Yeah, that's rough as far as what he got accused of. Like Epstein had an island, but
I just read
Oof.
what a certain person sent me. Gross.
What?
Ugh.
I
Wait.
don't want to repeat it. Apparently, it was like an R. Kelly alleged incident.
Oh no.
Wait, who
Oh
sent you
no.
Sam sent it to me.
Oh no.
Wait, why was he sending this to you?
Allegedly, what Vince McMahon is accused of. So
Oh,
Yeah. Yeah, the headlines aren't great and
no. So
yeah.
I'm not going to repeat it because I don't know.
No.
I haven't looked at it. All I saw like 30 minutes ago that I was thinking because I'm like, he's had other sexual harassment claims against him, and I'm like, he survived it. So I'm like, who knows? But you know, he literally just sold like $670 million of shares. So, but that's the thing though, he still owns massive amount of shares in the company. So even though he's not the chairman of the board, he's still going to be influential.
Mhm.
So I don't know.
well,
But-
I'm gonna sign off. I'm kind of tired, but I wanted to pitch that because I know you've been looking for a builder stock, and I was like, oh, this is kind of interesting, and it seems cheaper. Like, Builders First Source, which is similar, but they're more exposed to residential,
Mhm.
is trading, 40% more expensive.
Yeah.
So are the builders and everything. So it seems cheap in
Yeah.
the space. I mean, they all are cheap right now. I think if you're right on residential coming back, you might knock it out of the park everywhere, no matter which one you pick. But anyways,
you're surviving the move, huh?
yeah, I'm spray painting the ceilings tomorrow. So today was so what we're doing right now is because we bought the house Wednesday, and so we want to get in by the end of February. So we're repainting everything, but ceiling and walls are different color. We're replacing a couple of the doors. I don't know if that's going to happen right away. And then we're replacing the carpet with laminate.
Will it be open concept?
It'll be whatever concept my wife wants. That's what it'll be.
Okay. This is true. This is true.
Because basically you're asking the person that has no idea. But no, that's just it's been good. I'm just it takes a minute. It takes a minute for you to adjust to like that schedule. So
Every man makes a plan. Every man's wife laughs at him.
Well,
man makes a plan and the wife laughs.
good luck, man.
No, I mean it's honestly I don't mind it. It's just like tiring.
Yeah.
like,
Especially
I
with
remember
Disney.
moving. It took me like we ended up throwing out a dumpster worth of stuff, which you don't even know where that comes from.
Dude, it's insane.
Because we had one of those boxes that you move.
A little bit more, so we go price turn in.
Oh, I know what you're talking about. Yeah, the like U-Haul type.
Yeah, the box where they dropped the box off. We loaded it.
Oh,
then
the pod.
The pod there. Yeah. But then we're like, wow, we got all this. I need a dumpster now. I'm like, what the hell? I didn't think I had this much shit. So we filled a dumpster as big as the pod.
Yeah.
So You don't realize how much crap you just don't even care about, but it's in your house and it just sits on a shelf, and you're like, it's okay on that shelf.
Yeah. Or it's
If I
like
have
in the
to move it,
closet,
now
you
it
don't real,
changes. Like,
or it's in the closet and it's like buried somewhere in there, and then you like pull out, you're like, oh no, just
Yeah.
throw this away. No, the worst part honestly about this haul is if you know anything about German Shepherds, is that they always have anxiety for no reason, and so our dog's like freaking out, and they keep like waking us up at night, like barking random shit, and they're like, what's going on? You're moving stuff. What's happening? Are you gonna leave us, dude? Let us sleep.
I just
my dog,
hope that
every time I come home, they bark their faces off every time. And you could be gone for 2 minutes, and they do it every time.
yeah. I just hope that like you're able to secure some vacation time for yourself. 'Cause far be it from me to tell you how to do your life, but
We're going on a cruise in April, so
okay, all right. That
You know, he told us that, and thanks for listening, Bacon.
Yeah.
He told us that before. Remember, I told him to
Dan is a true
embrace
friend.
embrace the corniness. I told him that. Thanks for listening, Bacon.
I wasn't gonna make you feel bad, Bacon, but Dan did that for me. So
You motherfucker. Hey, as long as I don't swear in the beginning, I'm good.
Yeah, yep.
So.
This is true.
all right, well, I'm gonna sign off, guys.
All
I'm
right.
probably gonna listen.
Thanks
I'm
for
not
being on.
Jim Fish working out, but you guys have a good one.
Have a good one, Andrew.
Peace.
Oh yes.
I don't know how
Hey.
much more I'm going to talk about Tesla. Okay, for I don't know. I struggle to figure out how much. Here's people will say I want educational, informative videos, right? But then I look, my shit talking videos get better views. It's like I see the conundrum. Like, so it's like, well, I want to do informative shit. Okay, well, it's like I did the shit posting review of Tanner and Strongman.
Mhm.
And then I posted like an investment thesis on TKO. It's like the shit talking got 4 times more views. So it's like, but I don't want to do that all the time because like it's tiring because like, what do you want to say about Tesla? It's like, it's fun sometimes, but then it gets old. And I don't want to bash Paul all the time either.
Yeah.
Although
No, you're
coming-
a man of many talents, and you
I
know,
can see if you were trying to do this and you were obsessed with growing subs and like your goal is to grow subs and viewership, you don't and make money. Like if that's your goal with YouTube and you know, talking about subjects is just a way for you to expand your business. So it's like you're fluid about what you talk about. It's just whatever people want to listen to. Like I don't know, future investing, maybe he literally just gives people what they want. It's so fucking obvious to Chris and me that this is why we're like he is Jeremy Lefebvre coming, because he's fluid. Whatever he knows he can talk about that people will watch, Tanner will push that on you, and it's hilarious to watch. Like, of course he got to SoFi. Of course he claims that that's like his investment thesis and all that bullshit. But we'll see on Monday about SoFi. So I don't know. They're all semi worried, I think, right now, because they got to wait all weekend and it's in the morning on Monday.
I think that's a legitimate worry considering all the big banks have cautious, reserved guidance or guidance. Yeah. Oh yeah.
So if they don't hit profitability, holy God, I really, there is so much of an expectation between analysts and just everybody online is like they will be profitable this quarter. Like it's inevitable, man. If they miss, like I see the stock getting cut in half if they don't get profitability, and even if they do, I we'll see. But it's like they will cheer if it goes up. Like say it goes up $1, and they'll be yeah. It's like you're all holding fucking bags, all you Tesla people or SoFi people. They were buying at $12, $15 a share. So okay, you're holding bags that aren't so heavy. Good for you. What's the market done since last fall? Pretty good. Like so, and you missed all of that holding your SoFi. But of course, they'll tell you they bought it when it's $4, right?
Of course.
That's what they'll tell you. They were buying it when it's $4. So do whatever you want. Don't have the viewers tell you what you want. They'll vote with their eyeballs. Yep.
Oh yeah.
Like I said to Chris, I couldn't imagine doing this for a living, depending on people watching this stuff.
No, hell no. Hell no.
Ugh, so gross. Like even if work's stressful, like I know where I stand. So
yeah.
We will see. SoFi is overrated. He must have wanted to say overrated.
Yeah, that's my guess as well.
Yeah. I just I don't know. And they'll be like, you were wrong. See, you've been destroyed. I'm like, it doesn't freaking matter to me. Like, I have a growth fund.
Yeah.
That's what they don't understand. It's like, I have a growth fund. I'm not dependent on PayPal or Tesla or SoFi. SCHG does its thing. It does really well for me. Like, it's all good. Like, I got a little piece of it. I got lots of NVIDIA in there. So whether I didn't have to directly buy it. So anyways, I just
Yeah.
think I am so convinced when I look at Tesla, I'm just like, it drives me nuts because I'm like, I'm not gonna make any more specific videos on Tesla probably for a while. I don't know what else to say. The path was to make premium electric vehicles. I don't understand. I can't understand this race to the bottom. I don't understand it. This is
It
like
was-
the weirdest thing. And like car companies notch out a brand and they create recognition and then the ones that are successful like Toyota and Honda, right? They create this brand and they hold on to it and they don't like there's a reason why there's not like a $10,000 Toyota or a $150,000 Toyota. They know what their brand is. And like when Ford was making the F-150 Lightning, it started creeping up in price to 100,000. And Jim Farley had a tough choice because it was like they don't make six-figure trucks. That's not what a Ford F-150 is. It's not
Yeah.
a luxury truck. So they're like, he was really trying to figure out how to make it work because the costs were so prohibitive. And then that they scaled it back, I think, because they're like, you know what, we're just not doing it. We're not raising the prices on these things. I don't know. I thought Tesla had it. They came out as the premium car.
Yeah.
And I thought, I'm like, they don't have to, we're not talking luxury, we're just talking premium. And then you establish that recognition, you really dive into the premium of an EV. So it means better finishes, better tech, everything better. And then you can establish that, okay, yeah, you can go buy that Chinese piece of junk. It maybe gets the same mileage, but who cares? We're a Tesla and you're going to pay more for us because our cars are better. And I don't know, but they're in a race to the bottom at this point with China. That's the biggest travesty. I mean, they want to pursue AI and robots, fine, but a price war with China is a death spiral. Like, you're not going to win. I mean, you're going to keep lowering prices on Teslas. Like, the Chinese government's just going to start funding BYD more and more. You can't win this.
No.
Like,
It's
I don't know what his game plan is to do this. I mean, the governments can help with tariffs, but Jesus, like, bad news bears on that. So
yeah, because
and the other thing, there's hybrids that are coming. Like Toyota has some really incredible hybrids that are coming in 2025. I was reading about them today. They're talking like 750-mile range on a tank of gas with their hybrids.
wow.
These are new generation hybrids that are being built, like triple motored. I saw, and then Stellantis has like a 700-800-mile hybrid concept for a Ram. So there's in the next 2-3 years, you're going to see some mind-blowing hybrids coming out, I think, and it's going to make people think again.
Oh,
Because
yeah.
a lot of them put the hybrids on the shelf because they thought, okay, let's just go right into EVs because that seems to be everything. Now the sales day is like, okay, EV sales not growing so much. People are being more cautious. They don't want to spend so much. So, and now you're going to have a different option now because they're bringing back hybrids. So, and then America's producing more oil than we ever have in the history of, I think, in America right now. We are producing like crazy. So it's just a weird place for them. I think they're making big mistakes. And then Honda is coming out. They have their hybrid. They are also coming out with a GM backed Altima electric car or SUV, which I think they're just Honda sometimes just throws out a car just to show that we can.
Yeah.
So they use the Altima, not the Tesla platform, which is kind of interesting. It's like, again, nobody's licensing Tesla technology, which he said in the call he'd like to, but nobody wants it. So, okay, I want to hear this. This was the one you were talking about?
Yes,
Okay.
yes, this is the one.
But price to innovation multiple?
Yeah, so I'm really trying to educate investors, maybe rethink about the word combination a little bit more. So we go price to earnings to price to innovation, price to PEI, price to earnings to growth. And it's worth it to pay the premium at this point because it's a very different kind of innovation market that we're in versus where we were in the.
What the fuck? What?
Big Pharma chill.
Well, you know
Biotech
what?
is included in there.
You know what the dream is? To create one of these ratios and then freaking I don't know. Can you trademark it? Can you trademark a ratio? I don't know. It's math. You can't trademark math, but wow. I don't even know who she is. Do you know who her name is? Or
I don't even know. Cheryl something, I think, but yeah,
I don't see her name.
yeah, it's not good. Not good.
That's awkward. Cool. Create your own ratio. You go, girl. So I don't know. Oh, price to innovation. Maybe I should do you think it would to do a like how could I do a core satellite for a growth investor? Do you think that even matters or
Maybe. It would be an interesting exercise. Like for me, it's so foreign a concept that like I don't really have.
I never really intended it to be a specific growth type of a portfolio idea, but I mean,
Yeah.
so many young people are obsessed with being growth investors. I think it's like you could do it with ETFs and then some satellite positioning maybe.
Mhm.
And I think you do just fine. It's just you have to be reasonable and not be 70% PayPal. I don't know.
Yeah,
But
I'd say so as well.
innovation, price innovation. I love it.
Yes. Yep.
Other
Are
than
we
that,
back? We are so back.
so I don't want to talk about Tesla anymore.
Yeah.
So no more Tesla. I'm not going to do any more Tesla specific videos unless something crazy. I'm ready to move on from Tesla. So I'm going to look at that one he gave me because I like the cabinet play. I don't love it. I've only put like a opening position in that cabinet company.
Yeah.
I like how he said like the GMC has a mix of commercial and residential. I like diversified players.
Yeah.
So that's why like the cabinet company had diversified. They were doing wholesaling and direct to sale and retail sale.
Their balance sheet's not terrible on it either.
No. They all have questions though. The ones that the ones that are great investment opportunities have already run up though. So it's like
Yeah.
the Builders First and the Simpson Manufacturing have already run up. Like those are the two gems in the space to me that have already just I mean, you can buy the quality if you want, I guess, but big expectation at the valuations they're at. Man, I got to read this more. I wish I had more time this week. Now that I got this intel, so they're guiding down, right? Was that the under expectations?
Mm-hmm.
I have not understood. Like, I've been team AMD because my friends are in AMD. I trade AMD. Like, I don't know. I don't see the Intel play. They don't have an AI chip. Like, it's all just hopium, I guess, that it will come. And the valuation at 25 was like, it didn't really have to even come, right? Like $25, I don't think they even have an AI chip wasn't even part of it. But now if you're at $50 a share, oof. And I still maintain I wanted to wait till they actually finish some of these fabs in America. I talked about this like a year. Shit, man, it must have been like 8 months ago. So
yeah, there was I forgot the name of the executive, but the gentleman had a record with AMD, and he was basically the head of Intel's GPU. You know, like they released one unit, and you'd think like, okay, we'll keep it going, but it turns out that that guy left for a startup. So like Intel's like potential into AI, since a lot of them have been using GPUs, is shaky. It is shaky.
yeah. So I don't know. I mean, my only my pure fab plays. I have KLA. That's mine right now. So I got to read this tomorrow.
Oh yes, yeah.
They went down. I think part of them going down was related to Intel guiding down. I think I haven't had time to look, but I don't trade KLA. Look, I just bought it. I bought it like $330. So okay, we're good. Like, do I want to buy more at this? No, but
Even
so
then, like, yeah, didn't Texas Instruments also report, or I forgot if they did or
I
didn't.
can't even get into that one right now.
Yeah, but
Honestly, I'm
even
down only.
even then,
I'm,
like,
I've got a few thousand in Texas Instrument. Like, I'm
yeah,
probably gonna just start chopping. I have individual stocks that I'm probably just gonna start chopping down at this point.
yeah,
Like
yeah. Texas Instruments also is a different tip probably compared to KLA.
long-term holdings. I thought it was 16, but I missed some stuff I forgot to count. And
Mhm.
I think I'm gonna try and get that cut in half. So
Yeah.
I'm really interested. I actually might talk to Doc more about factor. I've been reading factor investing stuff.
Mhm.
Very interesting. The Fama French,
Oh yeah.
Dean Fama, Kenneth French. I was reading the actual research paper at lunch today. It's a lot of math in there to read, but the 5-factor version of their modeling. So I don't know. I've been trying to look for a more substantial thing to do with my Roth than just SCHD and G, and then sprinkling in some REITs. So I might really push into this. I was thinking because I have my 401k is basically just VT. I mean, it's basically just most of the equities in the world. I mean, except for a small cap US, it's pretty much just it's all the other stocks in the world. And then I was like, I want to do something different. So
That could be a great collab if you and Doc were up for that.
I want to see more data on the value small cap investment thesis because that seems to be the biggest crux of factor investing is that you get small cap because they have more room to grow, risk adjusted return, and then you get the value side of them, not the growth ones. You get the value play. So assuming that the price is depressed, and I'll have to look more into it, but so I don't know if that pairs the large cap. I think they're more talking small cap value, and then I might pair it. I think I mentioned Jesse like a large cap growth. I think growth on large caps makes sense.
I think
But
so
I'm
too.
modeling this stuff out, and then we'll see.
Yeah, knee jerk. It just seems like it would.
But I'm trying to take some ease off this. Less individual holdings. It's such a pain these days, and then I just rather do other stuff sometimes. The individual stuff is becoming more of just honestly speculating is for fun, and then the more long it's all kind of turning towards ETFs and indexes. So much less stress. That's for sure. I don't see ever buying a global index because I have problems with the global indexes. The China exposure for one, and then even though I'm trading China right now, but it's all right. I'm not investing in China.
Trading it.
Yeah, we'll trade it. We'll see. Other than that, what time? Geez, an hour. Does anyone have? I've literally had a hard time looking at anything because
Time.
it's just been trying to get audits submitted, and then I had to talk to I had to have 2 meetings with a county and then their lawyer, and I had to talk to the treasurer, and then I had this fucking report come back to me 3 times.
Ooh.
It's killing me. Like I had an auditor literally, she can't add. Like it was basic. Oh, it drive me nuts, dude. I want to fire her so bad.
I know that like this facial expression is gonna get screen capped, but
I'll tell you, like, if you want to piss off when you get an accountant or when you become an accountant, if you want to piss your boss off, take your supporting docs and don't put the right numbers in the spreadsheets related to your sample doc if you're an auditor. So, and then do this repeatedly. And I want to choke you. Like, I can't even stress you. Like, because like I'm not looking at every document. If I looked at every document, I would just do the damn review because I can do it better than her. Like I'm supposed to have some implied trust, and it's really annoying. But it's a line of work not everyone's cut out for, Bacon. So the thing is, like, if you're going to be a CPA, you can do taxes, but if you're not a CPA, you're honestly going to be an auditor. I think is a better path than a straight up accounting. That's just my opinion, but auditing has a good path in the government. If you're going to stick to the government route, I mean, accounting has less job opportunities, I think. So have fun You can always get a
Advocating
CPA
that.
license and leave the government if you want. I mean, government doesn't matter for CPA license. If you're going to go through the effort to get a CPA license, then you should
Might
do
as
like
well,
what Chris
yeah.
is doing.
Yep.
So he's got a great plan. But Dan's saying he's just built different. I'm not saying that. Who's saying that? Bacon is in school to be an accountant.
Yeah.
So I've been an accountant for 10 years, and Andrew's been an accountant for like a handful of years. Fabio was an accountant. He's not really an accountant anymore.
No.
He's not. He's doing like finance bro stuff. So anyways, Intel. Okay, so guidance down.
Yep.
I just like some people, at this point, I'm like, if you buy an ETF, I want to look for individual holdings that are going to be like potential doubles, 2x opportunities at least. I'm not going to say 10x. Don't say 10x. But like Intel, like why can't you just buy like a chip ETF or the SP? I don't understand the big deal with this company. So
Yeah. No, I agree. Might as well like, because if Intel goes up, odds are it's probably because like rising tide has lifted all boats. Odds are.
So let's see. Their AQR paper on factor investor related to Buffett Alpha, I recommend to read. Okay. Is that by the same two economists, that AQR paper? So I'm still looking more into it. Plus, once I figure out what factor investing is, my understanding, I have to then decide like SCHG is not going anywhere. That is like my favorite fund in my Roth. So I need to figure out how to balance, like, do I get 2 or 3 or 4 funds to make this factor work? Kind of interesting. So
AQR, my guess is that's the same AQR that's under Cliff Asness.
okay.
Pretty smart guy. Pretty darn smart guy.
Wait, okay.
Yeah.
Oh, I'll find it. I'll write
Yeah.
it down. So AQR.
Mm-hmm.
Yeah, you can see me exploring for this stuff, and it's like I've done the individual stock holdings, and like you guys have such great. There's so many really cool, like from my point, like looking at them now,
Mhm.
there's some really cool ETFs out there in like the apparently factor methodology based ETFs. There's lots of really cool ones out there
Oh, yeah.
that, and you'll be so much more stress free, and you still can get a damn good return, I think. But
Yeah.
the idea of holding, like, you see somebody online, they're like, I got like 10, like they have like $400,000 in SoFi. I'm like, why are you doing this to yourself? Why are you doing this to yourself? So you could be like, oh, I'm gonna prove you right or wrong, Dan. I'm like, I'm just some dude on the internet. Why the hell do you care what I think of SoFi? You're willing to risk so much, like, because that can go really bad. But
Would it be better if instead of like being SoFi bro, they were like some random industrial ETF, so long as it hasn't run up?
SCHB has up to 2,500 holdings. Yeah.
Oh yeah, because Internet Warrior is asking your thoughts about SCHB versus VTI. Or just SCHB in general, as far as some of the questions.
I was thinking about this because Chris, so it's the idea, if you're a boglehead, you buy every stock in the world or every stock in America,
Mhm.
and you're just benefiting from the increased economic activity and of that country or the world. If you're buying the S&P 500, though, you're slicing off the top, the cream of the crop, like, because there's like 3,000 companies in America, right? So you're taking the best 500, let's say, and there's a cleansing effect because someone was on a podcast talking about they like Sears.
Oh, yeah.
Sears dropped out of the S&P 500, then most of the pain happened until bankruptcy at that point. Leggett and Platt used to be in the S&P 500. Now it's gone, and the pain of that thing deteriorating you don't experience. So it's indexing, but it's not the same idea. You're not just benefiting from the economic, growth and prosperity of America. you're taking the top slice, and companies will come into it as they get better, like CrowdStrike will come in sooner, and Uber just did. And then, the stuff that is falling will get out of it. And so far it's a better thesis. You've done better buying the SP 500 than the whole US. I think that's a better way to look at it, though, is that you're not, I don't know. I think you want that cleansing. It makes more sense to me that you want to have some sort of demarcation where you're not investing in every stock in one country. I don't know if it's 500. Maybe you want some mid cap. There's like a 750. The Schwab has a 750 biggest companies in the US. Same idea, basically. It's just you're slicing a bigger top off.
Yeah.
But I always say it's like any of these. It's like if I'd known these when I was younger, it's like you just buy it and you don't think about it. And you're not swapping strategies. You're just tweaking strategies as you get older. So, man, like that's why SCHG to me is like so beautiful. I think, and I looked at VUG a little bit too. That one's that one's a little more complicated, and I don't know if that's a good thing. This fund has a more complicated selection criteria than SCHG to get to the same point with growth. But I don't know if sometimes overcomplication is not great.
Yeah.
But
good thing is that Vanguard is usually grown up, and usually.
But I want to run more ideas of so large cap growth, because it's really hard when you get to be the biggest 500 companies in America or biggest 750 to continue with growing. Because look at what Tesla, like screeching to a halt almost growth. So if you want to just invest in, and there's not that many companies large that actually are still growing. I mean, most of these growth funds is 200, 250. And then, but then it makes sense logically, I think, on the small cap side, the value side of play to me makes more sense, is that you're looking for depressed value companies that have more upside. So we'll see. I don't know. It's a fun idea.
Yeah.
I don't really, he mentioned this one. I don't know. SPGP. I know I've looked at this before. Okay, wait, GARP. So what is GARP?
Growth at a reasonable price, probably.
I've heard of this before. Let me see. Growth at a reasonable price. This fund investing index comprised 75 securities as per them identified. Highest growth scores and qual. Oh, okay. So you're mixing growth with quality.
All right.
That's an interesting topic. I might do at some point.
Yeah.
Growth versus value, or quality versus value. I don't think I think I see people online think they're talking about value, but they're really talking about quality.
Yeah.
Like Paul mixes this up all the time. He thinks he's talking about value investing, and then he starts talking, and he's actually talking about quality investing, but he doesn't know the difference. I've heard other people online, they're like, I want an amazing business. It's like, okay, are we quality investing here, right?
Yeah.
It's not what you're doing though. When you're what are you ending up doing? You're buying 3M. That's what you're doing, Paul. You're buying 3M, and it got whacked. So, freaking clown. That's an interesting idea, though.
It is.
I could do a video on this. Maybe
Yeah. And for sure, like there's definitely like bound to be overlap in some cases. Like,
okay, so what do they have? Portfolio. Interesting. Energy companies.
Yeah, because that is
Energy.
Diamondback.
Steel, Nucor, KLA.
Yep.
I like it. Well, let me see. View all. So a lot of energy. Okay. Semiconductors, fabs, Arista Network, Broadcom. I think it's equal weighted. It looks like it's equal weighted. They're all about the same.
Yeah.
So it's a lot of fabs and some tech too. Granger, I like that one. Yes. be something to.
It's an interesting one that Gil has put forth. For
I'm
sure.
curious. How would this? Okay. That's what I was thinking. Okay, if you paired it with QQQ, obviously way less energy. I mean, interesting. Overlap weight only 15%.
Yeah.
Because I could see just looking, I'm like, this kind of makes sense to pair with QQQ to some degree.
Yep.
Interesting.
Especially if it's equal weight compared to QQQ.
Yeah. Kind of weird they're equal weighting it.
Yeah, the equal weighting makes me wonder about the rebalance, but then again, if it's done in a grown-up way, who cares?
The fee, I would assume fee is down. Where's the fee? Okay, that's pretty typical for
Mhm.
this type of investment. Yeah, 0.3. Something methodology based. It's about what
Yeah.
you'll pay.
Yeah.
Interesting. I bet it's done pretty well.
Fingers crossed it should.
Diverted and need all our trash.
Diversify.
Diversity.
Diversity, rather. Yeah.
Have all my small portfolio to gamble. I mean, that's kind of what I do these days. Like, you obviously got your 401k crap, right? You just pick the choices they give you, which I've already covered when I index that. The Roth could probably be factor. And then, yeah, I have my side account, which I could honestly just put it in Robinhood or something. Might be easier to do it than Schwab, but yeah. And then I have my fun account where I do things like bet with triple leverage on China or short things. So, but it never gets that high. It's fun to do that.
Nothing
Weed
wrong.
out all the trash. There you go. 100% SP 500 small cap since value premiums have been down.
Small cap value, they meant to say.
Okay, yeah, I was like, he added two different things.
Yep.
Yeah, I want to understand more why the value and not the growth. Like, why is it the value for small cap for the factor investing? And then they say like small over large. I'm assuming because they're saying they have more potential to grow.
I have a suspicion that it may be because like a lot of these papers are academic in nature or by academics,
Mhm.
and that value just simply has been the approach that has had the most written about it compared to others. That's my guess. I don't know, but
The one thing the reason I would want to keep if they're comparing before.com large companies to small cap, it's like we didn't have these tech companies that we have today with these massive freaking cash machines, right? If you look at the companies that were the largest companies in America before.com, you're talking like oil companies and IBM and General Motors, I think, and GE. So like a lot of conglomerates, energy companies, I guess you call IBM tech back then. So although more industrial. So I mean it's kind of different now. That's why I don't model anything before 2000. When I do modeling, I always start at like 2000 is the latest I'll go because I don't think anything is really that applicable before .com. Because this is the age we're in, I think. The technology age started at that point. So, I mean, I remember being in the 90s. I'm telling it was a different ball game. It's totally different.
Oh yeah.
So I don't model back. Some people model back to the 70s. I'm like, bro, what are you doing? Like, we're going back to Jimmy Carter with inflation and running out of oil. Like, I don't understand when you model that far back. God, if we ever got to Jimmy Carter type times again, kill me.
rough.
My parents have told me about that time. It was not a good time in America.
Yeah, I always wondered because like our textbooks would say gas lottery system, or as far as like when you could fuel at the pump, and a lot of states apparently they did it by gas or your license plate number, like what the
Jesus.
last digit was or something, odd or even.
Yeah. I use Robinhood because it lets me use margin spend. Ooh, yeah. I always thought that Robinhood was going to get in trouble because when they started, I think they've changed this. When they went public, people were complaining that as soon as you logged in and created a Robinhood account, they automatically gave you margin,
Oh,
which is not how it's supposed to work. You're supposed to request margin like Schwab. You fill out a form. You used to have to fill the form out and mail it to them. Now you can do it online. And they would ask you specific questions about what kind of investor you are. Obviously, you could just say whatever, but they did ask you, what are you, a beginner or more advanced investor? Stuff like that. And then there were levels of margin. You'd pick one, and they can reject you if you tried to do like the one with like Iron Condor in option trading.
Yep.
But I guess Robinhood was giving you margin when you opened up with them, and people were not aware they had margin, I guess. But it didn't really get, it's not like they had some huge lawsuit over it. I mean, I don't know if they do that still. I don't really follow Robinhood, but Big Parma. Yeah. I thought about for a little while Robinhood as a play on crypto. And then I'm like, I didn't buy it. And honestly, I thought the more I looked into crypto and all the excitement about crypto ETFs, I'm like, this is all bullshit. And I was like 1 week away from shorting Coinbase. Because I was thinking about it at the end of last year. I told Jesse, I'm like, I don't know why everyone thinks Coinbase is going to benefit from this. And then I missed it by a week, basically, when it went from like 180 down to like 130. Man, I was like, I was right about to do it too. Because I'm like, who thinks, why would BlackRock or who else? Not Vanguard, but the big players are new Bitcoin ETFs.
Yep.
They don't have to deal with Coinbase. They don't have to. They can go right to the miners to get their crypto. So, and that's kind of what happened, I think. So, and then you saw like a lot of those funds have not done well. They're definitely overhype on that.
Oh yeah.
VT is sensible if you want hands-off global index. Yes. So, I covered it in my 5 options for your 401k. I'm like, the only critique I would have in that situation, which I did in the video, is that, you know, if you're buying every stock in the world, so if that's how you're doing it, if you don't have a total US option, now you have to pick like I have to do the S&P, a mid cap, small cap US. You have to figure out how to balance those, because you're trying to market cap weight the world. Then you have to also market cap weight the US, those 3 to the international one. So your options might preclude you from doing it. I mean, Chris, I think, doesn't go that far. He just does literally like the biggest US fund and he pairs it with the biggest international fund. Just so that's, you know, simpler to use, you know. Buy news. Yeah, I do the S&P 500 option in my 401k, and then I do a international that doesn't include China. So it's a little different. It's not all the international. It precludes it doesn't include Canada or China. So it's mostly like Europe, Australasia, and then Japan. And then a mid cap. Literally the only mid cap they gave me. I got one. See, here's the thing. Like, I got one mid cap. I have no option. So it was that one, take it or leave it. There's no other.
That's rough.
So it's you can have all the strategies in the world and that's it. It's like, there were 2 small cap and the fees were effing stupid. They were almost 1%. So can't do that one. So like a lot of it's like, it depends on what the hell you have in your options at work. My wife's got like, you know, I saw my friend's wife, like 5 pages of options. They send it to me. Like, what are these companies doing to people? That's ridiculous. 5 pages. So what are people going to do? Like, you're like lost in the woods. And the sales guy at your store or your company, he's not an investor. The financial guy, advisor, he's just a salesperson. They'll just give you some pre-made stuff that they like packets they have. So pick this one, ultra conservative or growth, or they just label shit. They don't know what they're talking about either.
Yeah.
They just get a commission when you sign up.
Yep.
CBOE is my good play as a strange crypto. I mean, if I cared to, which I don't at this point, I would just buy like Bitcoin every year. I don't know. If I was going to play crypto, I would just go say like I'm going to buy $5,000 of Bitcoin every year with my tax refund. And I would just never look at it again and just put it away. So, and I don't really care about the keys thing. Your keys, I would just buy it some exchange. 5 Ethereum at one point. So I did pretty well on that actually. Let's see. I just went with Vinix, a small cap. Yeah. Yeah. I'm probably going to be more, I'd probably more dive into talking about ETFs than individual stocks. So I don't know. I think there's a lot to cover there with like different ETFs. And then the way you can balance it where you have the potential for some outperformance, right? If people want some outperformance, you could get a shot at it with certain allocations, I think. But you're not risking like vast underperformance like an individual stock. So it seems like a good risk return idea. Some of these balances, not too much work, like a quarterly rebalance, maybe some of these strategies. There's a few strategies where it's like weekly rebalancing. I'm like, that's ridiculous. There's no way that'll work. I don't believe it.
Yeah,
it's too much.
You got to have wizards that are on top of their game to not have taxable events.
What if a stock grows a big part of your portfolio and you still think it's undervalued? It's scary having a huge portfolio of one stock. I mean, McDonald's is more than you. A lot of my money. It is. It's. I'd imagine it is terrifying. I mean, just people would tell you could hedge it. I don't know. That's kind of. I don't see the point. I mean, I understand that. Yeah. I mean, I guess it depends on how you feel about that stock, and how important is that money to you.
Oh yeah,
Like, could you risk the volatility at this point, or does that terrify you? Because you could just start selling off little. So, I guess only like one of my friends has he has a lot of AMD shares. So he's been an AMD investor for a long time, like long time. He was buying it when it was $20. So he's like, this is crazy times right now. He's been asked like what to do, and it's like, I mean, I'm not. It's it's your stock, but he's been selling off little pieces, like 5 shares here, 5 shares there, to capture some profit. But I mean, substantially, he still has most of it. And he does options occasionally on those shares because he doesn't want to sell it. So he's bought puts and he's bought calls. He doesn't sell for premium. That's stupid. He doesn't get into buying the contracts, but yeah. I guess it's a good problem to have, though, right?
I'd say so.
Yeah. I've never believed some people are like, you don't want to let it run too far, and then you need to start trimming it right away. I'm like, no, you don't need necessarily. I mean,
yeah. I mean,
cutting your winners.
Like if you have other ideas,
total world. Oh my god,
that would be hilarious.
I really, really want to go scorched earth on yield max, but I told myself I'm going to wait until Tesla does a reverse split. Because right now there's nothing substantial to talk about other than they're just losing money, deteriorating, like I fucking talked about 5 times. So I'm like, no. I'm like, somebody wait for your moment. So I'm like, I'm gonna wait until Tesla does a reverse stock split. When the price goes to $4 or $5, they're gonna do it. They'll do a 10-to-1 or 20-to-1 split, reverse. So then I will freaking let them have it. And I have 5 or 6 channels I want to highlight. The clownery. I have it all saved so far. I'm building up my files, but these people have just it went down exactly like I thought. They went from Tesla to Coney. Now they're ditching Coney because that failed, and now they're going. They're not doing another yield max, so they're going to a Defiance fund or Clip or some other T-Rex fund I've seen. Just some other bullshit. It's all the same, and they all just say they all fully accept that they're deteriorating funds and they're losing money, but they're okay with it. I'm like, are we living in we're living in La La Land? You're okay buying a deteriorating asset.
Just want to,
and then you want to brag about it and have a YouTube channel and try and pretend you're teaching people how to do this. I would fight these people, man. I'm telling you, I would put gloves on and fight them. Like, I can't stand how idiotic they sound, but it's freedom of speech, I suppose. So they are more than welcome to lose money. I guess they can lose all the money they want, and pay taxes. I guess that's the bright spot. They're paying taxes, so they are funding the government for us. God bless them. They're patriots. So that's what I told one guy. I'm like, you're like a patriotic mother effer because you're paying so much to Uncle Sam and you don't even realize it. It's like, what are you doing? But then they'll be like, oh, I'm doing this in my Roth. I'm like, that's even worse. That's even worse that you're doing it in a Roth than if you paid taxes because you don't get that money back, right? You put the money in your Roth, but you can't replace it if it goes away. Like, it's gone forever. So
If only we lived in a world where you could get some yield and price appreciation.
some yield max
Imagine.
channels are talking about this. So they knowingly accept that this is coming.
Oh,
Maybe
man.
they're too dumb to understand this is a really bad thing.
Oh man.
Reverse stock split are very bad.
Yeah. Yeah. It's
Because
painful.
then you have accelerated your losses because now just it always goes bad when you get to this point. Like
Mhm.
they probably are thinking, oh, well, you're not losing anything. It's just a math transaction. I'm like, no, this is a very bad sign. This
Very.
means it's a seriously deteriorating asset. Like, get the fuck out. Oh, yeah. So many great companies do reverse stock splits, all the time, Bacon. I don't know if you know that. It's a sign of a power company right there. You want me to get... Now I have like 5 or 6. I have one guy. There's one guy I can't stand. He's not even a big YouTuber, but he was so cocky and he messaged me. And
Oh no.
so I messaged him back. I wasn't even that mean. And then he blocked me. And then he called me an arrogant prick. All I told him was what I just said. You're buying a deteriorating asset. You should stop. You're making a mistake. And he's like, you don't know. Your research sucks. And he did exactly what I thought. He sold Tesla, bought Coney. He's off YouTube, this guy. He hasn't been posting videos in a month, but he thinks blocking me is going to stop me. No. But I can't stand these people. And the problem is like there's people that are going to follow them and get crushed. And
Oh yeah. Yeah.
but wait,
Feppy.
oh, Feppy.
Feppy.
Okay. This I don't want to crush all of these. This one I kind of want to crush in a video. I'd rather do more informative. Reviewing a clown ETF is kind of like what a waste of time. But this is the fucking stupidest thing I've ever seen. I can't. When I saw this in another Discord that we were in, they were all so like, why do you buy growth stocks, Bacon? Why do you buy growth stocks?
You think you're going to get price appreciation.
Okay.
It's going to go to the moon.
So we buy growth stocks because we think they're going to grow, right?
Yeah. Yep.
They're not mature companies. You're buying them because you're willing to take on the volatility because you think you have a higher reward because higher projected growth, blah, blah.
Yep.
So, okay, take your growth investments and let's pair it with a covered call strategy where we cap your upside.
Yeah. Yeah.
So let's take growth stocks and cap their gains, but keep all the volatility and downside. Are you in?
Hell
Are
no.
you in? Oh, you're also going to pay a shitload of fees to me to do this.
Yeah, that's no.
Are you in? Come on, you're in.
No.
Are you kidding? Come on. You're missing out on 25% distributions. What are you doing? Wait, what are the fees on this thing?
Oh,
65. Okay, that's not as bad as I thought.
Okay, yeah. You know what?
Like,
I'll give him that much, but
what are we doing? What
yeah.
are we doing? I can't stand. And now JEPQ is a little different because it's not the same. JEPQ does not do covered calls, so JEPQ is not the same. And actually, JEPQ has performed okay. So this is more for just a growth covered call investment. What? So stupid. It's so stupid. I can't take it. Like, and it might perform okay because you might get a time where growth stocks run, so you're getting that appreciation of that basket, and then you get some premium from the covered calls, but then you're underperforming like QQQ. in that environment, you're going to underperform QQQ and SCHG, guaranteed. So it's like pointless. It's a pointless fund. Like, I don't understand these people. Wait, what we got here? Berkshire Hathaway should do a reverse stock split on their
Yeah.
class. 20 to 1? Shit, man. They should do like 2,000 to 1.
Oh boy.
I mean, what's that? Like $500,000 a share? Like,
Jeez.
they could do whatever they want.
Yeah.
Yeah, but Vu did a reverse split and Vanguard's still around. Well, I mean, ETFs do reverse splits because if they're a portfolio ETF,
Yeah.
they want to keep the share price down.
Mhm.
Because a lot of them you can't buy partial shares. So it's like Schwab, all their ETFs try and keep the price like under 100, I think, because you can't buy half share. You have to buy a whole share at a time. So
Yep.
it's kind of discouraging to investors if it's $500 to buy like a SPY share. But SPY is a commercial product. It's not for you.
Yeah. Yeah.
See, wait, what did he say? You might as well get at Darth dividend case too. He shilled.
Oh no.
I don't know if I should say this, but I talked to somebody about Darth dividend. I'm not going to say name, but I don't know. I've tried to get his friends to talk to him about it. He seems like an okay guy, and he's a nurse. My wife's a nurse, so I have a soft spot.
Yeah.
But I mean, it's like I don't want to have to swear at every. I don't want to be like, you're making a mistake. I mean,
Yeah.
we all make mistakes. Like yield max funds are a mistake, and it's really unfortunate that you're. And they say I did my, or they'll either accuse me of my research being shitty, or they'll say I don't understand. I'm like, I fully understand what yield max is, so I don't understand why you buy it. Like, I don't know how to argue this with you. Like, you're just wrong. Math is real. The math of it will get you. I just don't know how long it'll take. That's why I don't know how long it'll take, but they will deteriorate. So have fun with that. Pay taxes. God bless you. That's what I should just say to them. You're a patriot for buying yield max. God bless that. Because I don't want to pay the IRS anymore. So you go do it for me, Tiger. These cons are much better if they just bought Petrobras.
Oof.
I don't know. I don't even know what to tell dividend people, because I don't even know if I would be, if with what I know now today, I don't know if I would be a dividend investor, because it was more just happenstance why I became a dividend investor based on things that happened with the Great Recession. I got a big windfall and I was scared to death of losing it. So let's see. Darth Dividend was saying that Tesla was his idea. I looked at his video. He bought yield max funds to take the distribution to buy normal dividend paying companies. That was his idea that I saw. I've heard this strategy before. This is not the first time someone has said, I will buy a high yield fund, and then that fund's dividends will be used to buy responsible companies like Procter and Gamble. And I have an infinite money loop because it just pays for itself in a big circle. Again, you're just adding unnecessary complexity. Why wouldn't you just buy Procter and Gamble in the first place? Like in that scenario, like it's just unnecessary complexity for no reason. But just like people want to buy Horizon. I keep saying, like, I mean, I might sound like a dick, but I'm like, you have no business buying this as a retail investor. I don't know how else to phrase it. There's no reason to buy this as a retail investor. This is not a product that makes any sense for you to buy this company. It's like an externally managed freaking venture capital banking. Like, there's no reason for you to buy this ever. It makes no goddamn sense, but they buy it because it pays like a 15% yield. So, and they don't know what they're buying. There's no way they know what they're buying. This thing is freaking complex to understand. Like, I looked at it once. I'm like, what? This is not a product retail needs to buy. So that's what Tessie Schiller say. Yeah. When that reverse split comes, that'll be my call out time. I'm ready at that point. I don't know. Look at my fancy. Yeah. Look, Andrew is a member of the club.
Yep.
He's got a fancy icon. I didn't even realize I developed an icon, but there it is. So, oh wait, I'm StreamYard is showing like a little green squiggly,
Green, yeah,
so I'm sure
yeah.
it's a. I tried to make custom badges, and I didn't know what the resolution of the badges were, so I'll have to figure it out later.
Yeah,
I
I have
wasn't really intending to provide like a. Although if I got like 10 people subscribed, I could probably think of things to provide, I guess, but I don't know.
Yeah, I got the stream in another tab. Yeah, it's a blue star.
Okay, that's the
Yeah.
well. Middle market Dan BC. Yeah, okay. Who had the same for you? Just stay away from this. But this fun kills me. Maybe I should, because there are a lot of people talking about this online. I'm like,
Oh geez.
you don't. Why are you doing this?
Yeah.
You're going to underperform the QQQ. I 100% guarantee this will underperform QQQ at all times. So, and they're like, I need the income. I'm like, well, there's other ways to do that. So
Yeah.
cool.
There's so many other tools, so many other choices.
Yeah. Wow, this turned into like 2 hours.
Yep. I just don't get it. I don't get it.
All right, so I'm gonna definitely, yeah, I'm probably gonna do more ETF review videos because I actually kind of enjoy those. Maybe some
Yeah.
more books, and then some shit talking. I'm gonna probably cut back on the live streaming because I'm like, well, when people like talk about stocks and I have nothing to say, I feel like such a jerk sitting on some of these live streams. I don't know.
You're fine.
We will see. But no more clowning Tesla. No more. That's not true. We're not
For a while.
wait. For Gil said meet Kevin.
Mhm.
Was he crying during his Tesla live stream? Okay, let me pull it up.
Oh boy.
I want to see. Okay, audio on. What if I become like the factor investing guy? Like it changes my life. What do you think?
Yeah, there could be something there to it. Like I've been thinking about what you said earlier, which was like if you know what you knew, if you did it all over again and you know what you know now, would you still be a dividend guy? And I don't know the answer to that. Obviously, I'm pretty confident though that you would eventually stumble upon dividend growth and consider it because like I don't
That's
know if there's a
hilarious.
clear answer on that.
Yeah. So which one was it? The wait, was it on this or one of his clownish side channels? Oh, wait. Okay.
Oh boy.
Let's
Me
see.
too. What is come out and today is no exception. Well, I mean 3 point
Okay. I'm not gonna watch
slash
2 hours.
estimate.
Yeah.
And Rocket mentioned buybacks.
Gil-
Where's
Things
the
Gil
called
says it's a side channel.
discussed this morning. Waiting.
As we expect the fleet-based
Oh, here.
revenues from supercharging used cars. Why?
I want to see what it is.
And we believe the next one will be initiated with the next generation platform. In 2020,
CEO, but one particular awareness campaign we run in Texas, we reach.
Yeah, the increased scale also sort of helps us there. As we introduce new products, we have the opportunity to go renegotiate existing suppliers for better pricing. We're looking at
as well,
Okay.
Certainly we're happy to, except on the supercharger front, we're obviously happy to.
Oh, by the way, like I read the transcripts and the transcripts are so brutal because it's like all his stuttering and ums are in the transcript. So it's like 2 words, 2 words, ... 3 words, like you're like, holy shit. Like, it looks terrible in transcript form.
They give any electric car company access to our supercharger network. We're also happy to license full self-driving, perhaps license other technologies, and anything.
That's such a I couldn't believe when it's like,
Yeah.
how about you finish FSD? You're really talking about licensing. It's not done. Like, let's finish it before we talk about licensing it. What are people going to license? What beta version of it are they going to license from you? Unbelievable.
That could be helpful in advancing for a next gen vehicle. So these are not machines you can just order from anyone. They actually, we have to design. But I would, think of Dojo as
wait
a long shot.
Okay, let's see his face.
It's a long shot worth taking because the payoff is potentially very
See his
high.
face?
But it's not something
Wow.
that is a high probability. It's not like a sure thing at all. It's a
perfect timing. Let's look at his
high
face.
risk, high payoff program.
He is.
That's
Um,
interesting.
Look at him.
Dojo
not
is
doing
working,
well.
and it is doing training jobs. So, and we're scaling it up.
What is this bingo?
And we
Go
have
back to
plans
the
for
chart.
Dojo
Let's watch it again.
1.5, Dojo 2, Dojo 3, and whatnot. So, I think it's
Look at that face.
Yep.
That dude is like, what the F did he just say? I own so much shares. I'm losing my jet.
it's got potential, but I can't emphasize enough. High risk, high payoff. So, I think it still makes sense given the, even if it's a low probability of success.
By the way, this is so weird because normally when you listen to calls, like you have opening statements,
Yep.
right, from like the CEO and the head of investor relations, like the whoever that is, executive. Then like you have maybe a technical person, and then the investor relation guy comes in again, and then like the CEO has like more remarks, and then they go to Q&A. Like it's very like structured.
Mhm.
He's just talking like shit. Like
Just
there's
rambling.
no way any of
Yeah.
this was prepared. He's just rambling through random thoughts.
Yep.
There's I don't know if they have an investor relations person. Maybe they're in the background, like screaming inside, like their internal. They're like, I'm so experienced. This is ridiculous. Why won't he shut up? Oh, I don't know.
Very high. Yeah, I think anyway. I'm belaboring the subject. It's a very interesting program. It has the potential for something special.
Like this is what I wish I'd saved some of his videos, but like for people that are new, man, if you look at the timeline in the market, he started losing his freaking shirt. Like, because if you look at the chart, was it November 2021 to like January? Like stocks started falling off a cliff and he panicked. So he was bragging about it like that fall. And then November to January, the market's just dying and he sells in like January. He probably already lost a shitload of money. Says his thesis is he's going to wait until some interest rate thing happens. And then he starts buying stocks again 3 months later, when they hadn't even started raising interest rates yet, really. They barely had even done one at that point. He buys Tesla literally at the highest price it's been in the last like 3 years. After Giga Austin, the Giga Texas show, he bought shares right then, which is the highest price Tesla's been since like 3-4 years. I mean, and then he's shorting Costco, fucking, and people, oh, it's just 25 grand. I'm like, well, why are you doing it if you don't care about it? So yeah, I'm sure. I can't imagine he had this brief period where he did well in the market during COVID. He'll never perform after that. Like he's terrible investor. I remember his Affirm video was so bad. Like his whole thesis on Affirm, calling it the Tesla of finance, and then he drew some fancy charts, talked about it was the future of banking, just like SoFi people now and whatever. But they'll be like, dude, he's richer than you. It's like, well, all my money comes from investing, whereas Kevin's money comes from courses and real estate. Oh, yeah. And then don't forget, he sold all his real estate before real estate shot up. He sold his real estate before the market started performing. My real estate has never been more valuable than it is now. And he sold most of his. So to start House Hack, I think, and then the jet shit. But
that is messed up.
He's low. I'm guaranteed if somehow magically he could give all his stuff to Chris, to Strongman, all his real documents, man, it would be a bloodbath, I think, of bad decisions. But we'll never know. So we'll never know.
Jeez.
There's also our inference hardware in the car. So we're now on what's called hardware 4, but it's actually
Kevin is struggling here.
Thank you.
Yep.
And the next
I want to hear
it's not,
comments
it's not
at the
a,
end.
come back down or continue to come down, but we also want to see cost savings in other areas, which we are seeing, and is probably why we've been seeing these cost declines here. Really, it's a way of saying, hey,
what is this terrible software? Is this something he's providing? Oh, it must be him because it's a stupid name.
Yep.
Like this is pointless.
There's deflation in manufacturing, whether that's coming from
How do you even know where
innovation
he's
or
getting,
that's
where is
coming
he
from
pulling this
cheaper
information from?
commodity prices,
Like,
or it's coming from both. For example, going to a 48-volt architecture system and the massive reduction in need to use copper is one of the ways that you could actually save by saying that, hey, we're close to the end of 2024 or early 2025, which really means for us to actually price in the next generation.
I mean, you could see on their financials what's happening. They're selling more cars, but they're making less money. Any company in the world can do this. You keep dropping your prices, you'll sell more and deteriorate your business. So this is like nothing special what they're doing there. Oh, they're selling more cars at the expense of everything. It's like the meme from freaking End of Ultron or Age of Ultron. What did it cost you? Everything. But
model, we're probably forward. Shows you that Tesla is an interest rate sensitive company. In my opinion, that can still mean recession resilient, but not interest rate resilient. Very big distinction. That's very important. Company talking about Tesla's hardware that here you'll see the video stream with all the live information. You also
that's all we saw the part that was funny when the dojo is worthless. Long shot. You're buying a car company at a 60 multiple. I don't even know what it is at this point. Maybe it's less. 60 multiple for a car company. Like 90% of their income is cars, I think. Like, oh my God.
Not a single word was said about robo-taxis either.
Yeah, they didn't mention robo-taxis once in that call. Not once. So robo-taxis, which is a stupid idea anyways, honestly.
Yeah. So
like I work for the government, so people like I can't even begin to explain how so I've literally taken law. I've done this. So I've taken law and I've helped write regulation and policy. It's part of my job. So I'm on like the state supervisor audit for or whatever we call our committees. We rename ourselves. So I've literally taken law and written, guidance and regulation. It takes years and years and years. So even if you got to the point where robotaxi FSD was actually a final product, the actual application of writing laws, interpretation by departments, regulations being written with lawyers and accountants like me, you're talking such a long haul. Like I've written policies where the law came out in like 2014. We didn't have like actual regulations until like 4 or 5 years later. And it was just like job training funds. It wasn't something as complicated as automated driving systems. This will not happen. Like having state governments implement and allow automated vehicles on the roads anywhere in the next 10 years, 20 years, you're crazy. And remember, what was it? Was it the Cruise, right? Cruise dragged a child.
Yep.
I think it was.
I forgot how many feet, but it was enough to really mess them up. Like
child was it dragged by
Cruise
Robocar. I'm screwing up. Was it in Austin?
I want to say it was actually San Fran. Let me double check.
San Fran?
Yeah.
I think this was it.
Yeah, because it was October.
Well, there was a kid that was hit and dragged.
Yeah, there's even though the date on
this
this
was another incident. The DMV revealed that after sitting still for an unspecified period, the robotaxi began moving forward at 7 miles per hour, dragging the woman with it for 20 feet.
Yep.
Maybe this was it. Maybe it wasn't a kid.
Yeah.
So I remember this happening, and I said before, I'm like, people are more than willing, as crazy as it sounds, like we've accepted that people drive cars and people sometimes do stupid shit in cars, right?
Yep.
Drive drunk,
Mhm.
hit people. It's just accepted in society because everyone drives, you have to drive. Society is not willing to accept automated cars hitting people and dragging them. It's just not. And you'll think, well, thousands of people die in car accidents and we don't stop people from driving. Like, society has accepted it.
Yep.
Like one incident of a car hitting someone and dragging him down the road, and that'll stop any of this stuff in a state. I guarantee most states would be like this. Yeah, it's politics. It doesn't make sense, but
Mhm.
that's how politics are. And I've seen it in action. And you could take one incident and you think, oh, that's the same as this incident. Like, well, not necessarily. They could be treated differently. You know, they could be thinking about implementing this in the state. One kid gets hit by one of these robo taxis, or they block a fire truck from going to a fire and people die. Somebody gets dragged. Any of this happens, it's all shut down. And look what happened to this. After this happened, because they had driverless cruises. After this woman was dragged, I remember they said they canceled the program and then they had to put people back in the driver's seats again.
Yep.
One incident. So
What-
these people online that are telling you that robo taxis or FSD is, and I've said FSD means
Mhm.
when you see the video, it's already working, Dan. It's like, no. There's a person sitting in the driver's seat. That's not FSD. FSD is no driver. The car's doing its own shit. You're in no human interaction. Then it's actually a product that you could like conceivably make revenue on. But if you have to sit in the driver's seat, okay, where's the economic benefit? You're still a driver in the driver's seat. What's the difference? Except they took their hands off the steering wheel. The only way this provides value is if you could like sit in the back and play with your phone and take a nap. Like, it's the only way this makes sense. And you're not getting that. There's no way. No state, and this is not federal, it's state. Every state has to approve this because the federal government doesn't dictate DMV vehicle policy. But
the other one that was a gem in all of this is the cruise CEO lied to the regulators pretty early on.
a lot of Kevin's audience was saying they got margin called. Oh my god.
Ooh.
Well, we know there are
Yeah.
many YouTubers that were buying Tesla with all their money. I've seen videos of people that mortgaged their house to buy Tesla during the clown market. There were people, all their money in Tesla, everything. Probably took loans out. And then, so for that stock to lose 12% in a day is devastating, probably for those people. Like one stock. But I mean, I like Gil, like your 3-fund portfolio looks fine. I mean, that's and like people, it's not like if someone's like optimize, like optimize is just sticking to it. Like that's all that matters. There's going to be periods, any sort of portfolio is going to have periods where it doesn't do well. And then you get out and then it's going to perform all of a sudden. It's like, like think of all those people that were probably thinking about getting out of growth investing at the end of 2022. Like maybe they couldn't take the pain and the bloodshed of 2022 and it was too much for them. They sell out because they think growth funds are over forever, or growth investing, and then they miss out on 20-30% gains. So any strategy, it only matters if you can stick to it. So those people would have been better with any others. I would have said those people probably should be like value investors or something else they could have stuck to if they couldn't have done that. So I wonder how many Paul Guerrero followers living in the dumpster when he's short NVIDIA. Oh my God. So last time I looked, I think he was 8.5 million projected loss.
Yeah.
Although I think that was at 600. Now it's like 620. So that dude has ruined his family over this freaking short. He doesn't talk about it anymore, but he said he's not.
Why.
Well, he's not going to close it. He's too stubborn. He's going to think that he can get himself out of this he's going to believe it's going to tank at some point in the next year and a half. So why would he close it? He's going to ruin his family over this thing. Well, he probably already has destroyed. I can't even imagine doing that to my family. Millions and millions of dollars. He's definitely lost. Anybody who advice, like, I like, yeah, Kevin is personable and he's well spoken and he's, he's got the look. He has the studio. It's like, I don't know why these people don't understand. Like, it's, of course, he's a salesman. He understands presentation. He understands how to talk to you and how to look and how to smile. Like, I'm telling you, he's probably the type of guy who practices smiling. I guarantee you meet Kevin, sits in front of mirrors and practices like smiles and facial expressions. Like SBF used to do that. They were saying he used to do it too. But yeah, he knows exactly how to present himself to people so they will believe him. And yeah, of course, he can present things better than me. And you'll think because it looks better. He looks better than strongman shirtless screaming at the camera. But Chris is right. Like Chris is the one that's right, not freaking meet Kevin. He's just convinced enough people to pay him grift money with fucking courses. Buying puts and calls before earnings date. What could go wrong? Oh my God. Yeah. I've done that a few times just for fun. My spec account, like playing earnings, but man, it's so hard because like if they miss earnings, the stock's gonna go down. Yeah. But if they beat earnings, it could still go down.
Yes.
So the way it's not a 50-50 proposition. No. Earnings plays are like, you're more like a 1 in 3 or 4 shot actually. Because I played what was it, Mattel. So I did a small play on Mattel's earnings and they crushed earnings. They fucking crushed earnings, but guided down. And I'm like, this is such horse shit. I was right, but no, you weren't. So earnings plays are so, and you think, oh, I'm not going to do that. But then you see like a move like Netflix. And then in your head, you're like, oh man, I knew that was going to happen. I'll get it next time. And then you start thinking that you're some earnings master. But I've never heard of a super investor whose investments thesis is playing earnings. Yeah. Have you ever heard of some? I've never heard of a billionaire that he's like, yeah, I just play earnings all the time. So, yeah. Well, they'll sell you a course on how to do that. Of course, they won't show you how they did, but they'll sell you a course on how to play earnings. What is it? Anyone takes a picture with Kevin? Yeah.
Yep.
Call. Yeah. What if you buy both for insurance? Oh my God. Earnings plays are pure gambling. I mean, yeah, you'd be better off betting on sports probably, because at least that's 50-50. If you just take the points up or down, I mean,
yeah,
you're flipping a coin. Better than earnings plays. Stock is either going up or down, so that means there's always 50% chance. So if you have lost 3 times, you're due to win earnings. Pure math. Math is winning. Warren Buffett used to say, go big or go home. Warren Buffett. Mama didn't raise no bussy boy. You can't get to Mars without a rocket.
I think he said that in a birthday letter.
Warren Buffett accumulated most of his wealth after 50 years because of earnings plays. That's right. That the key, you compound your earnings plays. So triple leverage earnings, and then you compound it because you play the next earnings. So that's what compounding means. You can't lose. Oh my God. Well, anyways, I am excited for TKO.
Oh yeah. Fun. Yeah. Because the biggest
2 weeks. I think it's going to be. It might be the end of next week. It's like February 1st or 7th. So that might be just my fun shits and giggles investment for the year, because it's kind of cool idea still, I think. But
yeah, especially since like the biggest point of concern it basically is gone now. Like, I mean,
I literally just said that in a TKO video like 3 days ago. I'm like, one of my biggest concerns is management ownership. Like, I thought the board was still underdeveloped in the fall, and they're kind of piecing the board together more. because
Yep.
you have Endeavor, you have UFC, and you have WWE people. So you have like 3 different groups of people coming into this organization. Like, how are they going to work together? And then the Vince McMahon angle, where he was like the chair. He was, make no mistake, he was the chairman for life. If
Oh,
you looked at how they
Yep.
structured it, this
I remember.
if he didn't voluntarily leave, there was no way they were kicking his ass off the board.
No.
He has so much shares of that company. Even when he did this massive share sale, like November, he still owns a huge chunk of their shares. So he's still there though.
Yes, I do agree with your earlier
That's the
statement.
thing.
He
Still
does matter.
he still could shake things up. He owns I don't know what he owns percentage wise yet. After that sale, I'll run it at some point.
Yeah.
But it's kind of interesting idea. Like, it is a very unique business. Lots of different cash flow opportunities, which is kind of different because it's not one contract. They have like 4 contracts with different organizations.
Yeah, it is funny, like, because AEW, the other like bigger wrestling name out there, a lot of people were worried that like there might be bidding wars for talent contracts, but it hasn't really manifested that way.
Yeah.
Uh-oh. Look what the cat dragged in.
Dan, we are the blockheads.
Oh, another pitch. Didn't we have an icon, Fabio?
Oh my god.
Well, I mean,
we're at
you
2
do have a
hours
link.
here. This is going crazy.
There is a link.
Is he gonna come in? I was gonna like sign up. Oh my goodness. Fabio off that liquor.
Oh no.
He won't come on.
Oh no.
Dan, listen, a podcast dedicated to block.
What?
Block what?
BlockFi?
I'm very confused.
Block as in Block Inc? Like
we just chill and pump block.
Oh, yeah, ticker symbol square.
Oh,
that's cute.
That's where I thought he was going.
Yeah. Like, does Jack Dorsey really move the needle for like an investor?
Hey, listen, this podcast, we are selling to willing buyers at the fair market price. Okay. So
it is our prerogative.
Did he really? I even missed that part. He literally said it's his prerogative to.
He said that a fair amount. Yeah, like, well, rather like
okay. I must have just.
Versus, yeah,
that's not how prerogative works as a word.
Yes, I agree.
Prerogative is related to like a hierarchical structure, but cool. Cool, Tanner. You know, words are important.
Yes, I that's what I pointed out was like you could tell that he was
Where
getting
is the next
flustered.
fintech that will drive Web 3.0?
Yeah, because when
does it have blockchain? Does it have triple entry accounting?
Oh dear God,
that's what's going to skyrocket the system. Jack is now. Oh my God.
No.
Well, okay, that's about all I have to say.
Yeah.
Oh my God. Watch. Knowing me, I'm trying to have a nice calm week. Research my Ross Gerber video, and then Tesla's going to do its reverse split, and I'm like be forced to fucking produce that video fast. But I want to do the Ross Gerber video right though, so I'm trying to talk about like the person, the fund, and his agenda. I guess I don't know. There's a lot to talk about with him.
You think you might have to break it up into parts?
I don't really want to.
Yeah,
I don't want to talk about
I figured you don't want to, but yeah, and I'm not saying to do one way or the other, but
I think because I want to find. I'm hoping he didn't delete these because when he first came out with GK and pitched it, I swear to God he deletes videos or you can't find them. It was supposed to be an investment product for customers of GK, their investment advisory company. And then it became like his own political agenda tool almost. And I'm like, I'm kind of surprised that he hasn't gotten I don't know, like if he's telling investment clients to buy it, as a proxy for having a fully run investment because they have probably investment products for higher net worth individuals. So I'm thinking they probably are just telling, the lower ones, because they say they accept anyone. They're probably, oh, you got 20 grand. Well, you can't, the investment advisory is only for 100 grand or more. You could buy GK though. If he's doing that, and then he's like going on tangents, and it's pretty clear that portfolio is run by his madness about being a climate change warrior. I don't know. I'm kind of like, it's underperformed everything. It's like, is someone going to sue him over that at some point? Like, it's just a weird dude. Like, I'm sure he's super successful. Like, again, he's like Meet Kevin. I'm sure he's an awesome salesperson,
Oh yeah.
which, that's all it takes, I guess. But he owns a shitload of Tesla. So even if it goes up or down, he's still doing all right. So, no. Bobby's all right.
Yeah.
Oh, Gil, you remember that maybe?
Yep.
Okay.
Yep.
When he first came out on Kevin's channel pitch, oh yeah, I mean those are gone. We don't have those. There is an SEC filing though of Ross Gerber brought forward the Beachbody SPAC investors on Meet Kevin, and there's a transcript of it at the SEC, so he can't delete that. It's in the filings. Fucking hilarious. 99% bloodbath on that thing.
I'm not saying the SEC is perfect, but thanks, SEC.
Fabio, I can't do your podcast because apparently some dude hates me because I said Tesla's died in Chicago, and he wants to like cut my head off. Of all the things I've said about Tesla, that was the thing that was a bridge too far. That one statement that there was a parking lot full of dead Teslas in Chicago.
I love that. Like,
not that I called the cars trash or clownery or no. That was too much. Like,
it was beautiful though, because like we would like have timestamps, and we would pretty much laugh at the end of each timestamp. And that's the straw that brings the camel's back. Come on.
All right, we should end with this because we gotta end with this.
Yep.
So right here, there it is. This is from Tesla's website, people. If you allow the battery to discharge 0%, other components may be damaged or require replacement. Okay. Discharge-related expenses are not covered by the warranty or under the roadside assistance policy. So you say, well, they'll cover it because it's their fault the chargers didn't work. It doesn't matter. It doesn't matter. It was your responsibility to keep that battery charged. So any damage to those cars in Chicago is on the people that own those cars.
Oh yeah.
So there it is. And those batteries, when those lithium batteries have gel in them, that gel freezes. I don't think that's going to work. Not great. It's not great. That's not great for the battery.
No.
So, and any peripheral damage, Tesla's not covering it. I mean, Elon can say he's going to all day. We'll see. Kevin looks like a genius when he's with Ross. Oh my goodness. See, the problem Ross had is that he didn't fully embrace the clownery of Cathie Wood, because Cathie Wood is who she is, right? Yeah. Unequivocally, it doesn't matter if her stocks perform like shit. She sells NVIDIA at like $100, and it doesn't matter. You call her out on all this stuff on TV, and what happens? She just keeps plowing ahead, right? She doesn't care. She just keeps plowing ahead with her Cathie Woodisms and stuff. But like Ross Gerber tried to like, well, I'm better at clown investing Cathie Wood, but I'm still kind of sensible. So I'm gonna buy some gambling and some houses and the clown stocks. So he tried to like skirt rather than just embrace it. That was his problem. So now everyone hates him because he didn't embrace either side. He tried to be responsible and a clown, and now it's just like he looks terrible because he has crappy performance, and he like everyone hates him now because he pissed everyone off. Oh my God. Cathie Wood must buy a lot of timeshares. I give her credit though. She just doesn't care. even when she got called out last year for her terrible performance, she just didn't care. She's just like, nope. We invest the way we do because that's what we feel is right, and innovation. But all right, I better close this off.
Yeah.
It's almost 2:00. So
Thanks for having me on, Dan.
yeah. So Ross Gerber next, I think. And then I don't know. More ETF reviews probably. I kind of like doing those.
Yep.
But we know some stuff is coming, special events.
Oh yes.
There'll be some good special events coming. So
I hope that you do the thing that you shared a little bit behind the scenes.
I might do. I don't know if I want to do a stock analysis of TKO. Maybe. I have to see what they report. If there's anything really that interesting that I don't know if there'll be anything that interesting to talk about with it.
Yeah, it could be on the back burner.
Yeah. Anyways, thanks for listening, everyone, and we will see you later. All right.